Hello all, welcome back, and forgive the hiatus over the last 2 weeks. One of my oldest mates got married, so I've actually just been down in Australia and had every intention to upload over the last 2 weeks on the Tuesday, but it just rolled around to Sunday night, Monday night, and basically just, couldn't get around to it. So we're back now. I've got, I don't know, maybe 15 episodes in the, to use a very salesy cliche, in the pipeline, but they're basically interviews that are done. Most of them have been edited. For my Australian audience, you'll recognize a few names: Dick Smith, Equity Mates. These were some guys I got to interview in person, actually, when I got down. But now I'm back and recording this from my home in Stockholm, and back with a routine schedule. Obviously, maybe not obviously, but I'm super thrilled and excited to release what is becoming more bigger episodes and bigger guests. The podcast has experienced quite significant growth in the last month or two, and who's to say what that's attributable to? I really don't know. The last one did well with Christopher Hitchens, probably just because Ben Burgess has a recognizable name and audience, but then as well, I think Christopher Hitchens gets a lot of searchable value. Anyway, it's got nothing to do with this podcast, which is with the maestro, Nicholas Shaxson. Nicholas Shaxson is a British author, activist, journalist, investigator, former guest on this podcast, and most importantly, the author of the wonderful book, Treasure Islands. Shaxson is one of the most influential people to have blown the lid off the cancerous influence tax havens and offshore finance have upon the world. So this is another episode about offshore finance, about financial secrecy, about kleptocracy, really hitting on these themes as much as I can. Because the reality is that much of the world's super rich, both companies and individuals, park their money in a complicated web of trusts and shells where all transparency and accountability are lost. The consequence of this is, on one end, a huge gap in taxable incomes that could then be used to develop either a developed nation, but more significantly for a developing nation. This is just public funds that are not available then for infrastructure, for wage support, for X, Y, and Z expense that your taxes go toward. But then on the other, more malicious hand, this system of complicated webs and complicated trusts and complete lack of transparency, financial transparency, allows, supports, and propagates the worst crime and criminal organizations in the world. No criminal organization would exist at the scale it currently does were it not for trusts and financial secrecy laws. Nicholas Shaxson was recently mentioned in The Economist. They published a list of 5 or 6 of the best authors and books to read on kleptocracy, offshore finance, etc. And by the way, that also featured a fellow former guest, Oliver Bullough. But Treasure Islands made the list. And for me, Treasure Islands is the least opaque explanation, I should have just said clear explanation, for the plumbing and consequences of the world of offshore. And why I think Treasure Islands is so significant is because, for me, he explained the foundational knowledge for everything that informed Jim Henry's Blood Bankers, Bradley Hope's Billion Dollar Whale, Oliver Bullough's Moneyland, and Butler to the World. And then as well informed upcoming guests, Confessions of an Economic Hitman, John Perkins, and then as well Red Notice, Bill Browder. In this podcast, you can expect to hear about a real-world example explaining why your grocery shopping is likely robbing the developing world, the tools and slimy tricks of the offshore accountant, and then as well more on globalisation, the cancer of it all, and if there is really any way out. So please do hang around to the end to hear what my ambition is for this podcast. But with absolutely no further ado, here is the wonderful Nicholas Shaxson. Mr. Shaxson, the reason why I think Treasure Islands is so significant of a book is because it explained the foundations of everything else that informs, say, Moneyland, Oliver Bullough, Bankers, Jim Henry, even to a degree, Confessions of an Economic Hitman, Tom Burgess' Kleptocracy, so forth. It really gives you the plumbing of the financial system. And you wrote in Treasure Islands, anyone who wants to understand the modern financial machine must understand offshore. So I was thinking that we could use 2 fictional examples to explain the plumbing that you lay out in Treasure Islands. And we'll start with the first, say for example being a perfectly legal banana business, a British firm that purchases Ecuadorian bananas. So after that, they're shipped to the UK, they're delivered to Tesco's, and then sold to me or you. So it's simple enough, but I was hoping you could explain why it is in fact not so simple, and it drags you through the slimiest halls of this entire planet.
Yeah, okay, so that's a good one to start with. I mean, the first thing I should say about this is Treasure Island is a book about tax havens, and although the word tax havens has got tax in it, tax is only a part of what we're talking about. It's much bigger than that, and we'll get onto that. But this example you're giving is about tax, and tax is obviously very important. So, yeah, imagine a crate of bananas is picked and shipped in Ecuador and sent to the UK, where the bananas are unloaded and end up in, British supermarkets, Tesco's, for example. So and it costs, let's say it costs $100 in Ecuador to put that crate of bananas on a ship, and the supermarket can sell those bananas for $1,000. Okay, and we'll ignore kind of transport and shipping and stuff like that. But what happens is there's this whole paper trail that gets connected to this apparently simple shipment. The container ship goes straight from Ecuador to the UK. So physically, it's just a straight transaction. But in terms of the paper trail, it goes all over the place. And what happens is, from a tax perspective, the game is to shift the profits. You shift the profits out of the high tax countries, both Ecuador and the UK, and you shift them into tax havens. And how you do this, just a numerical example. So this crate of bananas cost $100 to put in a crate in Ecuador, put on a ship, and they are sold for $1,000 at the other end. There's $900 of profit in this oversimplified example. What happens to that profit? Well, you set up three companies. You set up one Ecuador company, one UK company, and then one tax haven company. Let's call it Cayman Co. So Cayman Co. And all three companies belong to the same multinational. They're just subsidiaries of the same multinational. So what Cayman Co. does is it buys that crate of bananas from Ecuador Co., from the Ecuador company, under the kind of accountants, the way the accountants do it. It buys it. And it buys it for $100 and sells it to the UK company for $1,000. Okay? So it's bought for $100, sold for $1,000, it's made $900 of profit. But because it's in the Cayman Islands, tax rate is 0, no tax. What's happened in Ecuador, though, the Ecuador company, it's cost it $100 to make this, to put those bananas on that ship. But Cayman Co. bought it for $100, so the profit there is 0. And likewise in the UK, they sold it to the UK company for $1,000, and the UK company then goes and sells it to a supermarket for $1,000. Again, hugely oversimplified. And so it buys for $1,000, sells for $1,000. Profit in the UK is 0. So hey presto, nothing productive has happened here, nothing useful. It's just pure profit shifting. Accountants, the whole sort of industry of accountants set up to do this kind of stuff. And tax authorities in both Ecuador and the UK are stiffed. And so a very important aspect of this is, like, I'm a kind of, I'm a journalist, but I'm also a very sort of activist at heart. And, I believe this stuff is bad and harmful. And so in the past, you've had a kind of image of, people who are worried about development and, poor countries, what's going on in Ecuador, for example. There'd be a kind of sort of paternalistic view of sort of, let's give foreign aid to these, poorer countries, which there's a role for foreign aid, of course, but it's a kind of it's a country against country problem. Okay, so you'd say, okay, the UK is screwing over Ecuador. Well, yes, that may be the case, but what's really happening here is that ordinary people in Ecuador and ordinary people in the UK are, in this transaction, are standing shoulder to shoulder against this big transnational company. It might be a UK company, might be an American company. So it's not, you have to kind of reframe your geographical understanding of what's happening in these financial flows. Of course, there is kind of colonialism and neo-colonial relationships all over the place. But for me, the big reframing is to think of it not so much in these geographical terms, but as a kind of ordinary people everywhere in every country against this kind of offshore roaming elite. And I think that's sort of, that's the basis for so much of the anger that is roiling all our democracies in rich countries and poor countries. Now, the example I gave, obviously, is, I keep stressing, it's highly oversimplified. And countries do take countermeasures and they try and block it, but then the accountants find ways around that, and it all gets more and more complicated. So the system is obviously much
secrecy
more
aspect comes into it.
and there's exactly, there may be secrecy involved and misinvoicing and fraud, and with the secrecy, the companies that they do a lot of, they're able to do a lot of fraud and stuff. So you get in these tax havens, you will get not only criminals, drug dealers and whatever, asking for facilities and stuff like that, but also big multinationals coming in, and they're using the same accountants, and so you get this kind of melding of bad guys with multinationals, and just whole sort of worldview of, it's a very libertarian worldview. It's a very kind of freedom. They keep talking about freedom in the tax havens. We need to give freedom to investors and so on. But this is, it's the freedom of the fox in the chicken house. The fox shouting freedom for the chickens. Like the chickens. Well, I'm not sure we want your freedom, actually, pal.
And it's freedom at the expense of a lot of other people. A proper libertarian should have freedom as long as it's not at the cost of other people.
In theory, yes, but in practice, this is what so much of libertarianism has been hijacked. I think there are different strands of libertarianism, but I think there's so much of what's going on is basically vested interests hijacking an idea. Obviously, freedom as a kind of concept is something that's quite attractive, but you obviously have to be careful about what you mean by that. And if you mean just freedom for the rich to exploit the poor, or the powerful to exploit the weak, that's very often, and that is what they are talking about in tax havens. That's the freedom of tax havens. It's a very kind of devious, twisted version of freedom.
So I can hear the audience saying, and I also thought it for a while as well, but just, it's a completely understandable and sort of rational worldview to say, I want to minimize the amount of tax that I am paying to a government. And as well, if you extrapolate it further enough, you can almost sympathize with a company that also wants to minimize their tax. But I think there is a huge difference between minimizing it and putting it to zero. And it's worth saying that, in this example of Ecuador and the United Kingdom and the Cayman Islands sitting in the middle of that, just as an example of one of the hundreds or thousands of tax havens that they could have used in that example, the Ecuadorian bananas, all the labor that they use there, the shipping, the transport, and then the same in the UK, all the labor, shipping, transport, are consuming all of this public utility, which the taxes are actually for. And so it's not just a case of maximizing their own profit. It's degrading and ripping off the countries that you're actually producing in, just for the benefit of a very, very few select amount of people that sit in whatever this multinational company might be.
Well, exactly. Yeah, I would agree with that. I mean, a tax is not a cost to a country. It's a transfer within it. So you're transferring resources from one individual or corporation to the public. And tax, so obviously everybody wants to pay as little tax as possible, and to have everybody else pay their taxes, or pay as much as possible, so that they can benefit from roads, schools, hospitals, the things that governments provide, and not have to soak up the bill. But of course, that's not how any reasonable society should function. Effectively, when a multinational corporation minimizes its taxes, and I don't think there's any big difference between cutting it to 1% and cutting it to 0%. I think all of it, the bigger the cut is, the more harmful it is. It's a sort of spectrum. But basically, it's as you say, corporations, big multinational corporations and wealthy individuals, when they use clever accountants, expensive accountants to cut their bills down to very little or zero, they are free riding off the taxes paid by everybody else. So they are, and it's like going into the supermarket and, getting a load of goods and walking out with them and then saying, oh, that guy over there, that poor guy over there, he's gonna pay for these goods, stiffing someone else with the bill.
And they consume significantly more of this public utility than a regular person might as well.
Yeah, absolutely. I mean, that they will use the courts, for example. Courts are very expensive. Public courts. They at the end of the day, their property is protected by police, the
Mm.
rule of law, and so on. That's tremendously expensive. And they use airspace, and they consume everything that to a
Hmm.
much greater degree than everybody else. So they are
Yeah.
using a lot more of the stuff, and they're paying less. They're offer if they can cut it down to zero. I mean, it's you have to be pretty good in this day and age to get it that low. But yeah, they tend to be paying, because of this system, a lower rate of tax, and often a significantly lower rate of tax, which goes against the
Mm.
sort of standard, widely accepted principle of progressive taxation, which is that poorer people should pay a lower rate of tax because the basic goods that they need, the food, the shelter, are such a big share of their income that they should be paying very little. They should be paying relatively little so they can consume those things. Whereas the rich, for whom food and housing is a much smaller share of their income and assets, they can afford to pay a lot more because it's not going to, they're not going to go hungry.
Hmm.
So you should have the poor being taxed at lower rates than the rich, but the tax haven system is flipping this on its head. So you're getting the rich paying less than the poor, and that's enough to make a lot of people very, very angry.
Yeah, I forget if this was from Treasure Islands or something else, but aren't the majority of the United States taxable receipts generated from people that earn between, say, 1 and 3 million US dollars? Rather than in a proper progressive system, the guy that maybe brings home $150 million at the end of the year would be maybe 20-30% of 150 million is significantly more than 20-30% of 1 million. And I don't know whether it's a consequence of there being just a much bigger accumulated pie of 1 to 3 millionaires versus the total pie of 100 million plus heirs, if that makes sense, whether it's just
Yeah,
statistics
I mean,
lying to us.
I think you start getting into quite complicated numbers here. I don't know the statistics for the United States. I don't remember. But of course, the middle classes are people who earn between, whose assets are worth between, a few hundred thousand and 2 or 3 million is a very large number of people.
Mm.
Um, and the richest, the really rich people. I mean, people talk about the 1%. It's really the 0.1%. So you've got a very
Well,
small
yeah,
number of people.
0.0001%,
Yeah,
really.
you go exactly. I mean, if you're getting into the sort of Jeff Bezos level, then it's really, really a tiny percentage of people. So at the end of the day, the amount of wealth held by these people. I was looking at the statistics recently. There's a Credit Suisse, the Swiss bank, does this annual World Wealth Report, and they work out how much wealth there is in the world and assets, and it includes financial assets and housing and also everything. And they reckon that overall there's about 400 billion US dollars worth of assets held by everyone in the world globally. And the top 10% richest people own about 80% of that. And I think the bottom 50% own about, I can't remember, but it's a few percent. It's a very
Yeah,
small number.
surely. Right, yeah.
So there's a huge kind of just wealth has been cascading upwards for decades, particularly since the 1970s.
If we return to this fictional example of the Ecuadorian banana company, could you say, before we get into you talking about the tools of financial secrecy and then, of course, the money laundering and the criminal aspect of this, could you just say ideally how that perfectly legitimate transaction that all of us participate in almost every day when we buy groceries, how ideally that would have been done, and then what the consequences on those businesses would have been? Because one could make the argument that it would raise the costs of the final goods if all of the taxes were taken into account for. So, yeah, ideally, how should that transaction go, and then how does that actually look like in the economy?
Okay, so I mean, in an ideal situation, you'd have not only our multinationals that are making profits, paying proper taxes on their profits, paying their contributions, paying their way, but you would also have sort of equity between richer and poorer countries. So that example, you have the UK and you have Ecuador, and there's 900. It costs 100 at one end, 1,000 at the other, and there's $900 of profit somewhere. And so, what would ideally happen is that $450 of that profit would go to the UK to be taxed at whatever rate the UK wants, and $450 would go to Ecuador to be taxed at whatever rate that is. I mean, again, it's hugely simplified, and you can get into all sorts of philosophical arguments about who's more deserving. But what you have is not only this problem of multinationals, squeezing all the stuff into tax havens and cutting their tax bills, but also the international rules. There's a whole international architecture of tax rules, international tax rules. It's about a bit over a century old, set up under the League of Nations in the 1910s, 1920s. And those rules are very heavily skewed, surprise, surprise, towards the richer countries. So even in the cases where,
Why didn't Lesotho get a seat at the table?
So, sorry?
No, I'm shocked. Why didn't Lesotho get a seat at the table?
Yeah, well, exactly, yes. So these countries, it's much harder for them to get a bite out of the tax, the international tax flows than it is international financial flows, international tax flows than it is for rich countries. So rich countries, a country where a multinational has its headquarters, which is very often the United States, but could be the UK or Netherlands or wherever, they will tend to be able to get a decent, some tax out of their multinationals. They're more successful with some than with others. But the US will tend to get, I don't know what the average effective tax rate is on US multinationals. It's probably about 15%. I can't remember, but the tax rate is twice that. So there's an awful lot of sort of avoidance going on. But if you have, a company like Google or Facebook or Amazon in another country outside of the United States, the tax rate on profits will often be incredibly low, and they will pay enormously. And there's a lot of complexity about what do we mean by profit, and they play all these games to shift profits. So, but effectively, these companies pay very, very little amounts of tax in other countries where they aren't the headquarters. And of course, poor countries are not where multinationals have their headquarters as a general rule. So, the rich countries will be favored by those rules.
Perhaps we could talk a little bit about some of the tools of the financial secrecy before we speak about maybe some of the other havens, because I've noted down here that, say, Delaware, for example, is a place that people might not expect to be fundamental to the sort of financial plumbing of the world. But what are some of the tools? I'm thinking shells, bearer bonds, trusts. Could you explain these and also highlight something that really stood out for me from Treasure Islands was something like how flimsy something like a bearer bond is to just be exploited. The incentives of this is so wrong. And some of these trusts, like this Australian journalist, Jacob Sharman, who just set up a bunch of financial trusts around the world with barely a passport that he needed to show. If you could talk about some of these tools and the most egregious examples you can think of.
Yeah, I mean, I should just on the case of Jason Sharman, I think it's important to note that if you're just an unknown person who emails one of these trust companies and says, "I want to set up this dodgy structure," it will tend to raise red flags among them, and the really sort of rich billionaire people will be able. Jason Sharman may have found it difficult to set up stuff in the Cayman Islands, for example, because they would have said, "Oh, we don't do that kind of thing." But if you're a billionaire, you can easily do it. So it was an odd study, that one, but very interesting still. Anyway, so what are the basic mechanisms of secrecy? I mean, I think the most, the old traditional version that people used to think of, first of all, was classic Swiss banking secrecy, that Swiss style banking secrecy, where basically bankers, they take your money and they're never going to tell anyone what you've got. They're not going to tell the Swiss tax authorities. Switzerland's never going to share the information with any other country if they get it. And the bankers, it's just like, gold bars in a dark vault somewhere, and only you have the key. It's that. So that's the sort of original standard version of banking secrecy. But of course, there are many other flavors. So shell companies is another. It's much more. So the Swiss banking secrecy dates back, centuries to, even before Switzerland was a country. But there's the sort of era of globalisation from the 1970s on is when you've had a real flowering of new kinds of secrecy that are widely used. So shell companies is another standard mechanism, and a classic place that offers secretive shell companies is the British Virgin Islands, and the BVI will let you It's pretty cheap, for less than $1,000, you can set up a shell company. What that does, it's a company. It owns, so legally, it's like a legal message. A legal mechanism. You, the rich person, own that company. That's your company, and it's the records are there in the British Virgin Islands. Um, and that company then owns things in turn. So it might own a bank account, it might own a racehorse, it might own a castle somewhere. Um, so you don't own these things directly. You own it via this shell company. So I wrote a story a few years ago about one of the most expensive real estate um, buildings in London called One Hyde Park, and I could go to the UK Land Registry and like who owns these apartments, and I can't remember 100 apartments in this big building. And I go down the list, and every now and then you get a real name of a real warm-blooded person. So this person owns that apartment from the land
Warm-blooded
registry.
person.
But mostly it would be XYZ company in the British Virgin Islands. So once you got that, then what do? How do you find out who's behind that? You can't, because in the British Virgin Islands there are laws. The lawyers who are handling the paperwork for this company are under an obligation not to tell anyone. And so if I go to I could fly to the BVI and I could find the lawyer's office who runs this particular company, who does all the paperwork for this particular company. I say, okay, who owns this? They say, I'm not going to tell you. And I'm not allowed to tell you because this is a tax haven, and I'll get in trouble if I do. So go away. So you're just none the wiser. There are now international protocols emerging, and transparency is beginning to penetrate these things, but it's still very complicated. And of course, you can then make that deeper by that company, instead of owning your castle, that company would own another company. British Virgin Islands company would own a company in Panama, which owns that castle. So even if you could go to the BVI and get the information somehow,
You have to go then
then
do it
you've got to
again
penetrate
somewhere
Panama.
else.
Yeah. So that's and you could have structures, that are 10. There's a big structure might be 10 layers deep. It's ridiculous.
Doing that 10 times across different havens or
Yeah, they
different
just
shell
go,
companies.
this company owns that company, and it would just crisscross all around the world and go to Belize and funny little places in Delaware and so
Nice.
on. I mean, it would usually be part of a much more complicated sort of corporate structure that does all sorts of different things, not just for owning one asset. But it's really, really hard to sort of piece together what is owned by that. So that's companies, and that's just putting these sort of screens in front of your assets. So you just can't see behind each screen. The next thing is the trust that you mentioned. I mean, it is an old mechanism, but it's really sort of since the age of globalization become incredibly prolific all over the place. There are trusts, and trusts are much more devious. So a trust plays with the very concept of ownership. So a trust, it has three parties. Basic trust has three parties to it. One is the what they call the settlor. That will be the rich grandpa who's got $1 billion worth of assets. That's the first party. The second one is the trustee, and that will typically be a lawyer. That's someone who's managing the trust. They are technically the legal owners, but they can't do anything. They can't take that money and run with it. They're under a very, very careful set of laws, so that all they can do is take sort of agreed fees for handling it and making sure the trust is managed properly. So they don't really own it either, because they're so hedged in with restrictions. They're not the owners. Note that the grandpa has given his assets away into this trust, so he doesn't own it either. The trustee doesn't own it. The third party to the trust is the beneficiary or beneficiaries, and that might be the grandchildren of the old man. And they are the people who will be entitled at some point to receive something out of that trust. So it may be that the rules of the trust say, okay, little Johnny here, he's 3 years old now, but when he's 21, if he passes his exams, he will get this much money. And if he doesn't pass them, he'll get nothing. And so under those rules, not only Johnny doesn't have that money yet, because he's only 3 and he doesn't get it until he's 21. But even then, the rules say he might not get it because he might not pass his exams. So he doesn't have any claim to these assets either. So you've got these three parties. Grandpa's given it away. The trustee, the lawyer, doesn't really own it. and little Johnny hasn't received it and may never receive it. So who the hell does own it? And actually, nobody really owns it. These trusts are in a kind of ownerless. These assets that are sitting in the trust are in an ownerless limbo, and so why would Grandpa give his assets away into the trust? Because he knows that once you've got the assets in the trust, you can set up the rules in such devious ways that you can achieve anything. You can let Johnny live in that castle, when he's, from now on, but he doesn't own it. So he's living in it. He's enjoying it. He's able to, or rent it out and earn some income from it or whatever, but he's still not the owner. So it's a very devious mechanism, and offshore is full of these things. And what you have is jurisdictions saying, okay, that jurisdiction over there's got these really devious trust rules. We're going to create something even more devious so that we can get some business from them and get some billionaires come and use our laws, and we'll charge them little fees for doing it. And so the whole system kind of gets more and more devious as jurisdictions kind of jostle each other to outdo each other to create deeper secrecy and more devious rules to help the rich and powerful.
I don't fully understand. I understand the example of the trust that you gave between a family and what the incentive might be to, say, make Johnny's conditions for receiving the money near impossible, so they can just exist with that asset for a long time, presumably without paying, I don't know, some sort of property tax. I'm not sure what the incentive is there, but could you explain? It's not obvious to me what the benefit that would be then is for a corporation.
Okay. Well, a corporation would like, for various reasons, to separate itself from assets, so it can still play with those assets, but it does not actually own them.
Yes. So they get the upside and the productivity from having it without having it being recognized, and therefore need to pay tax on it.
Yeah. So a lot of these, before the last global financial crisis, you had all these things like mortgage-backed securities, and there were these special purpose vehicles which were sort of holding. They were kind of receiving streams of income from all these assets, from all these mortgages, and then they were selling. They were using these special purpose vehicles as a kind of alchemy, so that they could then sell these on to other investors, other people, and those other people would be buying these income streams. They put down $1 million today, and they'll get whatever $100,000 a year for 10 years or whatever, or 20 years, and it was a whole kind of complicated thing, and investors would judge what it was worth, and the banks that were kind of sponsoring these things would sit in the middle, and they'd set them up, and they'd make a lot of money from these fees kind of flowing through. This money flowing through, and they'd just be creaming off money all the time. The reason they didn't want to own that stuff was that there are these rules saying if you have, they call it on your balance sheet. In other words, if you own it, if you own these assets, you have to, there's very strict rules about how much you can actually own, how much risk you can take on into your bank. And if you own it, you're taking on risk. If I buy a house, the housing market might collapse and I might lose a ton of money. But if I've got this asset out there at arm's length and I'm creaming money off it, then if the housing market collapses, I just say goodbye, let it go, and it doesn't affect my balance sheet. It's one of these quite devious things, and it's not entirely connected to tax havens. But I mean, in the global financial crisis, there was one of the first banks to fall was the British bank Northern Rock, and it turned out that Northern Rock had been using a trust, and they had set up the trust to have a beneficiary, which was a tiny little charity for children with Down syndrome based in Newcastle in northern England. And the reason for doing that was not that this charity got nothing. All it was a mechanism where in order to have a trust, you have to have a named beneficiary. Otherwise, the trust doesn't work. So what you do is you have this named beneficiary that just ticks the box saying, yes, this is a trust. They don't actually get anything. What happens is all the mischief happens inside the trust, and there's huge financial flows, billions and billions going round and round, and the bank itself, Northern Rock, was making lots of money out of it. And it turned out it was it was exposed to these assets, and it collapsed in the end. So the trust didn't fully protect it.
So within a trust, it's not like it locks up the money. It just says that this is now unavailable to what to be. I mean, because I don't fully understand how that would even work. I mean, wouldn't you, presumably, if you set up this trust and the incentive of the trust initially was to just secure wealth for some future generation, and now it's been chopped and sautéed for the corporations, but still the mechanics of it, once the money's in a trust, doesn't that mean now it's like not touchable? But it sounds like they're still
No.
they're still using the money to purchase and sell and so forth.
Yeah, no, there's assets and there's income. So you put the assets in a trust, but then all sorts of income flows. So if the assets
Income
are
generated from the assets in the trust.
yeah. So the trust is, if you've got a bunch of mortgage, a mortgage is a valuable thing for a bank. It's basically, a house owner is promising to pay the bank, $1 million over however many years. That's a valuable piece of paper, and banks can sell it on to other people. So that they've got a valuable piece of paper inside the trust that is legally separated from the bank, so that if that housing market collapse and that house owner defaults and stops paying, then the bank is kind of protected. But the income flows that all come out of that and then go through this sort of alchemy, the bank can certainly partake of that. And one of the things about trust is they're so incredibly flexible that you can set up the rules however you like to set them up. As long as you tick the boxes that this is a trust, you can make income flows go all over the place. And
Okay, then. So we've got shells upon shells upon shells upon shells. We've got trusts that are going to be interwoven in and amongst that as well. I've also written down bearer bonds as one of the key tools. But
yes.
Can you think of fun tools that just make this mess so much more complicated to the point of impossibility?
Yeah, well, I mean, bearer bonds are a kind of a very, very colourful and very nasty instrument. They're so bad, in fact, that they've pretty much been outlawed pretty much everywhere. What a bearer bond is a piece of paper that says, this, whoever owns that piece of paper, whoever holds it in their hands, owns whatever asset is held by this bearer bond.
Paper.
Yeah, if you hold this
thing.
bearer bond in your hand, it could be a right to a bunch of corporate bonds that are worth $100 million. It's like having ultra valuable bits of paper in your hand, and it'd have to be carefully kind of watermarked and stuff to make sure it's not forged. But these things, as long as somebody somewhere recognizes that and say, yes, I will pay you this money for these bearer bonds, and that does happen, then it is worth that much money. What's happened now is they're so, because if you've got $600 million that you can carry around in your pocket, you can obviously ship huge amounts of money across borders. You can smuggle. You can, drug dealers would love it. But now it's so kind of hemmed in. Governments everywhere are so angry about them. Even tax haven governments have been forced to stop accepting bearer bonds and allowing them to operate. That they really a marginal thing now. But they used to be back in, I don't know if you've seen the film Die Hard, but there was, I think they were all trying to break in and get a bunch of bearer bonds that were worth a lot of money with Bruce Willis. Yeah.
All right. So apart from those three, trusts, shells, bearer bonds, can you think of other dirty tools and tricks that they're using?
Well, I mean, banking secrecy is still alive and well, even if it's constrained. I mean,
and
the
that's
other
a cultural thing. Just we will not speak of our clients unless we're
Yeah,
legally forced to.
I mean, you'll get banking secrecy all over the place as well. Some countries will have banking secrecy towards their own citizens. So, they'll say it's a privacy thing. I think, quite a few countries. So the tax authorities can't look into people's, their taxpayers' bank accounts. They rely on them to be honest. And you can make all sorts of arguments about privacy there. Other countries will just make bank secrecy for foreigners. So if a foreigner brings their money to Switzerland, foreign tax authorities may not be able to get hold of that information. So banking secrecy it's still an important part of the mix. I think it's become a little bit less central to the system than before. But another one is simple lack of information exchange. So a country, you may put your assets in a country. It may be a portfolio of shares held in a shell company in the British Virgin Islands or in Panama or Belize or somewhere. And then when other countries say, I believe that my citizen owns a bunch of assets in your country, they might just say, no, I'm not going to tell you. And so that goes into under a category called information exchange, and it's just another form of secrecy. And the country that is that stands out most in this area is the United States. There has been in the last 10 years or so, since a lot of kind of public consciousness and anger about tax havens has really risen, and particularly since the global financial crisis, there has been a big move internationally to improve a lot of these things, to sort of find ways to penetrate shell companies, to find ways to penetrate trusts and bank secrecy, and also to improve international information exchange. There have been some really significant improvements internationally, which have generally been overseen by the OECD, which is a club of rich countries. But the one country so the United States has half-heartedly joined this international effort on information exchange. And what it's done is it said, okay, we'd love to get a lot of information from other countries about US taxpayers abroad. So the United States is now really good at getting information out of Switzerland, for example. And the Swiss are quite scared of the United States because US, they started about 10 years ago, they started locking up Swiss bankers and who'd been helping US citizens evade taxes. So the United States is very good at receiving information about its own taxpayers. But when other countries come to the United States and say, we'd like to find out information of our taxpayers in your country, that doesn't work nearly so well, and it's much harder to get information flowing in the other direction. So that makes that failure to share information about ownership of assets is a big feature of why the United States is a major tax haven, arguably, certainly one of the most important tax havens in the world.
Well, you say in Treasure Islands explicitly, the US is the single most important tax haven.
Yeah, and the reason I phrase it like that is that you could also make an argument that the United Kingdom, alongside its British overseas territories and crown dependencies, which includes the Cayman Islands, British Virgin Islands, Bermuda, and also Jersey and Guernsey. If you take that collection together, these are sort of former territories which are still partly controlled by the UK or very significantly controlled by the UK. If you take those together, you could argue that the British system is the most important player in the world of tax havens. There's lots of different ways you can measure it. There's no precision about it. But those two countries, I think, are exceptionally important in the whole system.
Yeah.
And yeah.
So the incentive for all of this that we've spoken about so far is simply to maximize profit, right? For corporations, it's sort of personal and corporate greed, largely. And that almost would be, more understandable, even a little bit more forgivable, if it weren't for all of the way I see it, and I would love to hear if you agree with me on this, all the collateral damage that all of these financial secrecy tools and secrecy in general allow, because it is through these same methods that, say, the perfectly ethical, well, not ethical, but the perfectly reasonable banana company might try and limit their tax. The same methods are being used by the drug cartel, or the human trafficking ring, or X, Y, and Z criminal organization, because they use the same methods to hide their money and therefore wash their money. And it is through having access to all of this capital that they can scale to the heights that they do. They can afford to have the militia. They can afford to grease as many palms as they might need to. Whereas if it was simply just a cash economy for them, it'd be much more difficult for them to scale to the heights they do. And so it is the collateral damage of this perfectly understandable incentive that financial secrecy becomes the cancer of the world, because it then enables a extraordinarily corrupt kleptocrat to take from his citizens, as it does an extraordinarily malicious drug cartel leader or criminal organizational leader scale to the heights that they do.
Yeah, I mean, you talked about it as a cancer. I think that is a good metaphor in many ways, because cancer, it spreads, it metastasized. And what happens, so take the banana company, for example. Imagine it's competing against another banana company that's doing, also picking bananas in Ecuador and sending them to the UK. But that company pays all its taxes. Well, at the end of the day, it's not going to be able to have the same prices because it's paying more in tax.
Costs just went up.
Yeah, so it's going to be at a competitive disadvantage. So the tax dodging company is likely to beat the proper tax paying company in markets, and eventually, take them over and just grow much faster. So it's a version of this old thing called Gresham's law, which is bad money drives out good. And you get this kind of, it's harmful competition on these factors, these completely unproductive factors. Companies more willing, and it's more willing to dodge tax. It could be companies more willing to pollute. It could be more willing, companies more willing to, play dodgy financial engineering games and cause a financial crisis and run off with the winnings. All of these things are part of the same mechanism, which is what you might call harmful competition, where this is an absolute corruption of markets, but it's also it also spreads because the bad players get an advantage, and so they're able to outcompete the good players. And so unless you have proper pushback against this system, you're going to get the global economy becoming more and more corrupt. And so who's going to push back against that? There's only one actor that really can push back against that, and that's governments. And that's governments pushed by their own citizens and voters. So it's a difficult game, what's going on. But thankfully, there is an awful lot of public pushback at the moment, and has been since the global financial crisis. So we have two opposing forces. We have, in one sense, this kind of corruption of markets going on. You also have this race to the bottom competition between jurisdictions to make the rules ever more devious and ever stronger secrecy and ever lower taxes to try and attract the business. So you have these forces sort of naturally pushing the tax savings system forward. But in the other direction, you've got this rising public anger pushing back, and it is having an effect. Since I wrote Treasure Islands over 10 years ago, there have been some really remarkable changes at the international level to improve things. There's a hell of a long way still to go, and loopholes all over the place. But without this pushback, things would have been so much worse.
Okay, but think about the example of the criminal organization and how they're using the same methods and tools as a perfectly legitimate banana corporation might be for them themselves to launder money, to remain secret from the officials that are trying to get them. Could you just say briefly an example of a drug cartel, how they might be able to scale to the heights that they do by access to capital?
Well, I think it's the same principle as with the big multinational corporation. They need to be able to survive. They need to be able to hide their money to be able to keep operating. And I mean, it's as simple as that. They can use the system, and they have done this since the days of since the days of the pirates. Really, I mean, people smuggling all sorts of stuff. They would tend to go to pirate. If you go to these islands in the Caribbean that are now bona fide tax havens, near Miami. Again, British Virgin Islands, Cayman Islands, they are places that were pirate coves. And basically, what was happening with piracy is you've got stuff that you're not really allowed to do in the big, powerful country. So you go and you take it elsewhere, somewhere offshore, where you can do these things. And these places would set themselves up to tolerate it. And the pirates would come in and they'd spend their money on drink and whatever. And the local economy would sort of benefit. So this is a natural progression from the days of piracy, of sort of smuggling and stuff. And it's the same with drug smugglers in Mexico. if they have all their money in Mexico, it's going to be more vulnerable to the authorities, so they take it somewhere else. And if they find somewhere like Panama, um, where they can, they can buy, when I was in Panama, you could see these at night. You could see these huge tower blocks, completely dark, and those tower blocks, you ask people what's going on there, and they say, well, that's just drug money, and it's not really for living in. It's just for
Just to
assets. They're just
funnel the
assets.
money there, pay some local construction company who will slice 90% of that back to you in a perfectly legitimate payment. But
Yeah,
something has to
yeah,
be built
or
in
you
there.
just
Yeah.
you just build them normally, or you just buy up something that already exists, and then you put it in a Panamanian shell company. You get a
Yeah.
dodgy firm like Mossack Fonseca, which was the company in the Panama Papers, and you get them to sort of run your paperwork, and they're not going to tell anyone, and until you get exposed by a giant leak, um, you're kind of sitting pretty.
Yeah.
Um, yeah.
Is this all sort of the consequence of globalization in a world where countries now needed to hyper specialize? A few countries that had no natural resources, super small populations, geographical isolation, really nothing going for them. They decided that the world of financial services was a good way for them to stand out, and they could offer a competitive edge over some of their other neighbors by creating all these very, very, very friendly financial laws. And if globalization brought these up, could you make the optimistic argument for the future that globalization might be gearing down a little bit after COVID, if you'd listen to Peter Zeihan and take him at his word, coming to an end, that it could be good signals for more legislation against all of these rules and tools of the financial secretive person?
Yeah, I mean, I think your way of portraying it as being quite kind to the tax haven, the idea of them sort of deciding that this was their strategic advantage. I think what happened in these smaller places was generally um, administrations drawn from kind of, fishermen and hotel owners and stuff like that. So what was really happening is these people who had no experience of, they could govern they knew how to sort of make sure that, the one road through the high street through the main town was kind of kept clean, and that the water system worked. That was their, would tend to be the sort of levels of expertise that was required in a tiny little place like that. And then you get these American lawyers come flying in and saying, hey, what about, we've got 6 pages of legislation here. Why don't you just pass this and you'll make a lot of money? And look what happened over there in the Cayman Islands. They did this and they made a lot of money, so you could do the same. And locals, it's not like they're saying we're having a national strategy to create this as globalization takes off. They're just like, oh, this sounds like a good idea, and it's driven by private sector interests looking for captive states, states where the lawyers can, a lawyer from a big multinational or from a mafiosi or whatever can just fly in and say, I'm going to write your laws for you, and then all this money is going to start coming in. And so and that's what happened to a very large degree. I know a guy who admitted to me that he had actually gone to a jurisdiction, and he had a client who needed a particular thing, and he went to a small island tax haven, and he said, could you write this into your laws for me, and you'll get some business coming in. And they did, and it worked out. He admitted it. um, and so another thing to note about these places is generally you will end up with a sort of you think a lot of money is coming into the country. It sounds great, but usually that will only be benefiting the main beneficiaries of this stuff in small islands in the Caribbean, for example, will be white middle-aged expatriates, lawyers and accountants and bankers who've come flying in. The local population, there will be some beneficiaries among the local population, but there will also be a lot of losers. So if you go to somewhere like Bermuda, which has got a tiny population, massive billions running through there, insurance, offshore insurance and shell companies and all sorts of stuff. If you go there, there is terrible poverty. There's a
Is that
whole
the
section
case?
of the
I'm
population.
shocked to
Yeah,
hear that. Surely,
yeah.
for your own
Some,
public image, you'd just grease
Yeah.
as much of the public infrastructure as possible.
You'd think so, yeah. And if you go there, I mean, it looks squeaky clean if you go to the right places, and it looks beautiful. And you know, you've got global billionaires buy their houses and yachts and stuff like that. So it looks beautiful. But you know, I know people who've been there and investigated this, and they've come back, and not only is there a whole underclass, people in debtors' prison. There's people living in caves because
Jesus
they can't, you know,
Christ.
and there is terrible deprivation there alongside all the riches. You know, some
Mm,
Bermudians have done very well out of it, but many have done very badly out of it.
mm,
But not only that, there's incredible sense of fear of confronting the finance industry. Nobody will speak out about it in public.
mm.
The people, you know, the journalist who went was really feeling bad about exposing these people that they'd spoken to the risk of being found out to be kind of collaborating with a foreign media organization, because the you know you get this kind of cultural domination of these small places where you have to support the financial sector, the offshore financial sector, and if you're not, you're a traitor. And it happens in all these little places. It also
That makes
happens,
sense. People are very tribal, and they see all of their upside coming from this one system that you all of a sudden decide to
yeah.
suggest might
But,
not
but
be ethical.
But this, you know, if you take a small place like Jersey, Jersey used to have thriving agriculture, used to have thriving tourism and stuff. But when all this stuff came in, it brought in a load of money, but it also crowded out all of this other stuff. So lots of people lost out as well. There's lots of people in Jersey, you know, having to work two jobs to survive. Housing market is insane there. You know, nobody can afford. Most people are having to rent sort of crappy housing. There's quite a few people in Jersey who've got very rich, but again, you get this very sort of divided society, and you know, if you start looking at places like the UK, which is obviously a much bigger population, the UK is doing really badly on compared to other countries, France, Germany, Scandinavian countries, um, on you know productivity, inequality, um, standard of living for large numbers of people is much worse in the UK, it's really deteriorating. I mean, of course, you can blame all sorts of things. You can blame idiotic
There's so
prime
many
minister.
factors for it,
You
you know.
can blame Brexit. You can blame whatever you want. But the fact that the finance is so dominant, I think there's a pretty clear case that um, uh, finance. It's kind of like a paradox. Too much
Mm,
finance is making um, certainly Britain more unequal, and many would argue it's making it poorer.
mm.
So, you know, these are vested interests. The offshore vested interest in each country is very powerful, and they are the ones who benefit. And often, not only the not people who don't benefit not seeing the trickle down, but they're seeing damage. They're actually worse off than they would have been if they hadn't been this financial dominance, because finance becomes very extractive and starts sort of sucking. You know, financiers get involved in very sort of extractive techniques to suck money out of the rest of the economy. And you know, the global financial crisis was one of the ways in which that happened, where millions of people had a terrible time. Um,
And so we've spoken about these hypothetical banana company, criminal organizations, but I think you've made it pretty clear, and you do in Treasure Islands as well. This is this isn't the outlier or the exceptional company that behaves in these practices. It is you are the exceptional company to not behave with these practices. So, can you put some real world names, individuals, and companies that you've investigated or that you know is certain to have used these tactics? Speak a little bit about how they do it. I'm thinking Apple in Ireland. You have a big bone to pick with Google. Tell me about some of these companies and how they are using these tools of financial secrecy and tax avoidance, and if you can as well, the consequences of it.
yeah. Okay. So I'm very interested in the topic of monopoly power and excessive market power. So companies like Google are they have got a chokehold on parts of our economy. So they basically, anytime a competitor wants to sort of compete with Google, Google will either find ways to crush it with its multi-tentacled um, different divisions all over the place, or they'll buy it. And so they do not like competition. They don't like anyone standing up to them. So they are steadily infiltrating their way into our world everywhere, all over the place. YouTube is owned by Google. They completely dominate the media industry because they have essentially stolen most of the advertising revenue from media companies. They've got themselves into a position where they've got a chokehold over the advertising. And so media organizations are kind of seeing their revenues plummet, particularly small media organizations, local media organizations dying out. They are, I mean, I've got kids and they're at school, and the school decided to use Google Classroom to so during lockdown, when they were having to do their classes online, we had to sign up to all these different Google things, and we had to accept all these different Google things. Public transport here in Germany, where I live, if you click on the apps, you'll see that Google's, the engine behind them. The browser that I'm using at the moment to talk to you has got Google, and even other browsers which don't look like Google they've got Google sort of engine in them. Our phones have got, maybe it's an Android phone, which is a Google thing, or if it's an Apple phone, there's all these kind of really big arrangements between Apple and Google. So anyway, Google is everywhere. It's an example of a monopolist, which has got, in terms of search, depending on the country, it's got like a 90% market share. So they are everywhere, and they are in every country. And the more sort of international a company is, the more scope there is it has to shift profits around, to shift assets around. It's got, Google has got another way that, so I gave you the banana example of how you could shift profits. Another way you could shift profits is you have intellectual property, and that might be a computer algorithm. And Google's got an algorithm, and it might say, here's an algorithm. This is a piece of intellectual property. I own this piece of intellectual property. It's patent protected, and I'm going to put that in a tax haven. And I'm going to then. So what will happen then is Google's got, economically, it's making huge profits in the UK. People are paying, advertisers, companies are paying it huge amounts of money for advertising, and it's got this chokehold. It's got this sort of monopolistic chokehold on digital advertising, along with Facebook and others. They're sort of serving different niches. But anyway, so it's got this kind of chokehold. It's got these large economic profits in the UK. Its costs in the UK. It's got some employees. It's got some hardware to service and buy, and so on. But the actual amount of money they're making in the UK, in real terms, in actual genuine terms, what any reasonable person would think is the money they're making, is enormous. And it's the same in countries around the world. But they don't want those real profits to be reflected in the accounts, because they will have to pay tax on it. So what they do is they have this piece of intellectual property, this algorithm located in Ireland, another tax haven, and they will then say to the UK tax authorities, okay, Google UK is using this algorithm, but it's got to pay huge fees to this subsidiary in Ireland just to use this algorithm. And so those fees are a cost to Google UK. So the profits that it would have had are reduced right down because of the fees it has to pay for this algorithm. And of course, there's lots of these algorithms, and there's lots of different kinds of intellectual property. And all of these things are, money is, from an accounting perspective, these are all costs. So for each one you put in, your profits get lower and lower and lower, because your costs in the UK, your accounting costs in the UK, get higher and higher and higher. And you can push it down so that your costs exactly match your profit, so that there's no profit. Google has got no profit in the UK, even though in reality, in real terms, they are making shed loads of money out of the UK. In accounting terms, they're making nothing. And all that money's turning up in Ireland, and Ireland creates a bunch of rules that says, okay, this money that this company is receiving in Ireland, we're not going to tax it. We're going to tax it we're going to create a loophole that means that only a tiny amount of the profits of that company get taxed. So it's companies, big giant companies, and as I said, big companies, any competitor who tries to sort of take them on, if it's a local company, they haven't got a chance. I've spoken to plenty of small business people who are trying to compete with giants, whether it's with Google or with Amazon. Amazon's another terrible, terrible culprit, and these monopolies have a whole range of tools to just crush their competitors and just keep them barely alive because they don't want to kill all of them. It'll look really bad. So they let their competitors kind of keep going, sort of limp on, with making tiny little profits here and there. But the real money is being made by the big guys, and everyone else is kind of in their gravitational pull. And the tax haven thing is just one of the many tools they use to keep them keep them down, keep their competitors down. And this is, so we are looking at the difference between an economy that is diversified with lots of different players in it, small businesses, big businesses, a mixture, lots of people employed in different things where everyone's got a kind of fair shot. Every business person's got a fair shot at making some money. That's the sort of an ideal one could aspire to. But in reality, what we've got is a few giant companies in every sector. And everybody else in that sector, their suppliers or competitors or whatever, they're just operating in their gravitational pull with very tiny margins for making any kind of living, making any kind of profits and stuff like that. And that's another way of looking at all this inequality that's happening. And so tax havens are a part of that, but there's a much broader story about monopolization that's going on that everyone's kind of asleep to at the moment. Yeah, so Google is a very mainstream multinational company. I don't think Secrecy is a particularly big part of what it does with tax havens, but it may be. I think, we don't know for sure. And one of the things that tax havens produce is complexity. So complexity is another mechanism for secrecy. You can't work out what a company's up to because it's so complicated. That's another way of hiding what you're up to. So I think the big multinationals that use tax havens will use them very often for these kind of tax games, but they won't. Secrecy is usually not such a big part of the game. Secrecy is a bigger part of the game for private equity companies, hedge funds, and then of course lots of dodgy actors in the crypto world. The crypto world is completely tied up with tax havens, and it's very there's an awful lot of there's so much kind of Ponzi scheming and fraud and stuff going on in crypto, and it's ideal for using tax havens. And it's something I'm just actually researching right now, and there are a lot of parallels with the history of tax havens because it's kind of Wild West in crypto land, and regulators are sort of struggling to work out what's going on. And celebrities are endorsing all this stuff, and then you have these kind of dodgy fraudsters coming in and crashes and secrecy everywhere as well. So the word crypto is a clue to that. And so there's a lot of overlap between tax havens and crypto. And of course, a lot of the exchanges and a lot of the activity is hosted out of tax havens like the Bahamas or Gibraltar or Madeira, and just strange places like that are known for those of us who follow tax havens or are known as tax havens. And you find, Dubai is another big one. Dubai is an enormous kind of criminal hub of dodgy activity from all around the world. And the other day I was looking at there was a crypto story about a crypto investor who made a lot of money and is now sort of on Interpol's most wanted list. And I just looked at, okay, where's this business based? Sure enough, Dubai. And so, that, this is a kind of new flowering of tax havens. Where crypto's going now, I don't know. There's been, we're in the middle of a big crypto crash. So I don't know how many people are going to be burnt and not use crypto anymore. But it is intertwined with tax havens, and it's also got a lot of sort of parallels with tax havens as well.
Hey guys, I'm really sorry about what happened at the end there. The technology just basically failed us. Nick went on speaking for only about a minute or two more. I was muted. I couldn't unmute myself. Then we couldn't hear each other anymore. And after 5 to 10 minutes trying to figure out the technical issue, time was up. But anyway, I think, the conversation had come to its sort of natural conclusion without opening up on the offshore finance of cryptocurrency, which Shaxson is currently writing quite a lot about, and also monopolies as well. But yeah, that's what it was. That's the reason for the abrupt ending. So thank you again, Nicholas. Upcoming guests that are going to be complementing what Shaxson spoke about today is Bill Browder, who's getting shitloads of airtime at the moment because of his specific relationship with Russia and the Russian oligarchs and Putin specifically. He wrote a fantastic book called Red Notice, I don't know, 3, 4, 5 years ago, and it is this incredible first-hand document of a Western capitalist in Russia during the 90s, during the most one of the most absurd transferals of wealth in history, surely. But then as well, the very, very famous Confessions of an Economic Hitman, John Perkins, who some of you might remember Jim Henry kind of questioning a little bit in our initial podcast. I think that was 48. Jim Henry, of course, authored Blood Bankers back in the early 2000s, which is, in my eyes, just one of the most amazing pieces of investigative journalism you could ever hope to find. He blew the lid off so many different scandals and corruptions. And I'm actually currently producing the audiobook for Blood Bankers as well, so obviously I'm going to keep you in touch for that. But you've hung around this far, so thank you so much for being an extraordinarily generous listener, but then as well for supporting the podcast. And if you have listened this far, then you've likely heard this plea before, but just in case there are any virgins to this deep in the podcast, I want to say thank you for listening, but then as well explain what my ambition is, and that is to corner the podcast market for eclectic curiosities wherever it is you're listening in from. So that might sound rather vague, and to be fair, it's hard to define. The algorithm, the podcast distributions, they don't categorize eclectic curiosities or even curiosities generally. So what I'm trying to achieve is not necessarily indexable at the moment. So the one thing you could do to support is to leave nice, fat, juicy reviews. So that's 5 stars in any of the podcast distributions, whether that's Apple, Spotify. I mean, they're the 2 big ones. Leave 5 stars, leave a nice comment. But also, just do what you can to support. I've got a website. There's a newsletter there. There's other podcasts. Reach out to me directly. Buy some of my photography. It's all cool. I just want to get to know you, and I want you to leave reviews.